Hello and welcome to AUSTRAC's AML-CTF Essentials webinar series. This is the first webinar in a four-part series designed to introduce you to AUSTRAC and Australia's anti-money laundering and counter-terrorism financing, otherwise known as AML-CTF, regime. Firstly, AUSTRAC acknowledges the traditional owners and custodians of country throughout Australia and acknowledge their continuing connection to land, sea, and community. We pay our respects to the people, the cultures, and the elders, past and present, and we extend that respect to Aboriginal and Torres Strait Islander peoples who may be watching today. My name is Strabona, and I will be one of your presenters today. I'm joined by my co-presenter, Mandy, and we are from the AUSTRAC Industry Education and Outreach team. Before we get started, please note that the information conveyed in this presentation is general in nature and it does not constitute legal advice. You may consider obtaining your own independent professional advice, which can take into account your business's specific and individual needs. The content in this webinar is at an introductory level, and more detailed information can be accessed on the AUSTRAC website. We will use examples and explanations throughout the webinar to clarify various terms that you will see used under the AML-CTF regime. These have been simplified for introductory purposes and do not comprehensively define each term or scenario. To support Tranche 2 entities to prepare for and understand the AML-CTF reforms and regulation, our team will be delivering a multi-tiered education approach from now until your obligations come into effect in July 2026. This webinar is the first webinar of Tier 1 to introduce you to AUSTRAC and Australia's anti-money laundering and counter-terrorism financing regime. Following the release of core guidance, our team will commence Tiers 2 to 4 of the education campaign, providing more in-depth information about governance, money laundering and terrorism financing risks, and your AML-CTF obligations. As part of Tier 1, to introduce AUSTRAC and AML-CTF regulation to Tranche 2 reporting entities, our team have developed an Essentials series with introductory webinars to ensure you are aware of your AML-CTF obligations and regulation. As you can see on the screen, there are 4 webinars in this series. This one, which provides an introduction to AUSTRAC, then Webinar 2, which will provide an overview of your AML-CTF obligations, Webinar 3, which covers money laundering and terrorism financing risks, and the last webinar in this series is about outsourcing in the AML-CTF context. And while this series will cover some of the topics noted for later tiers of the overall education campaign, this series, as a reminder, is introductory only. The later tiers will provide you with more detailed or sector-specific information to support you closer to the reforms coming into effect. Throughout this webinar, we aim to explain the role of AUSTRAC and the purpose of Australia's AML-CTF regime. We will also define key terms explaining what money laundering, terrorism financing, and proliferation financing are. We will discuss the risk-based approach and what some of your key AML-CTF obligations will be. And finally, we will take a look at the AML-CTF Essentials checklist and identify some practical steps that you can take now to prepare your business for AML-CTF regulation. I'll hand you over to Mandy to start us off with who AUSTRAC is and what the AML-CTF regime is and more.
Thanks very much, Rabona. AUSTRAC is an acronym for Australian Transaction Reports and Analysis Centre. AUSTRAC is both Australia's AML-CTF regulator and financial intelligence unit. As Australia's AML-CTF regulator, we currently regulate more than 17,000 businesses that provide financial, gambling, bullion and digital currency exchange services. From the 1st of July 2026, AML-CTF obligations will apply to additional industries and services that are recognised domestically and globally as high risk for criminal exploitation. This will increase our regulated population to approximately 100,000 entities. As a financial intelligence unit, we collect and analyse financial reports and information to generate financial intelligence that contributes to law enforcement and national security investigations. Money laundering, terrorism financing and proliferation financing remain ongoing threats in Australia and globally. Serious crime is motivated by profit, and most criminal acts leave a financial trail. Criminals target weaknesses in the financial system to disguise illicit funds and enable other serious crimes such as terrorism, slavery, drug trafficking, child exploitation, fraud, tax evasion and corruption. The businesses AUSTRAC regulates are often used to facilitate these transactions. To strengthen protections, the Australian Government passed the AML-CTF Amendment Bill in November 2024. The new laws simplify and modernise the regime for industries already regulated by AUSTRAC, while also expanding the regime to cover high-risk sectors such as legal, accounting, trust and company services, dealers in precious metals and stones, real estate and conveyancing services. These industries are globally recognised as vulnerable to financial crime, but are not currently regulated under Australia's AML-CTF laws. Designated services related to these industries are listed in Schedules 3 and 6 of the Amendment Bill and outlined in AUSTRAC's reform webpage. We suggest you familiarise yourself with these. The regime is also being expanded to capture the provision of virtual asset services. Bringing new reporting entities under the AML-CTF framework will increase awareness of financial crime risks and equip businesses to protect themselves and the community. Regulation helps entities recognise suspicious activity, reduce exposure to criminality and reputational harm, and safeguard Australia's financial system. Money laundering is the process by which criminals attempt to disguise the origin of their illegal profits and introduce these funds into the legitimate financial system. It's the cleaning of illegal money obtained through criminal means, so the money can be used legitimately. There's no single method of money laundering. It can involve moving funds through various assets and accounts, including commercial transactions such as property purchases or high-value goods. The money laundering process typically involves 3 stages. The first stage is placement. Placement occurs when criminals introduce illicit funds or assets into the formal financial system. This can involve depositing cash into bank accounts or using cash to purchase high-value assets like real estate, gold bullion or diamond jewellery. The second stage is layering. Layering involves moving, dispersing or disguising illegal funds or assets to obscure their true origin, often through complex transactions. In real estate, this can occur when someone buys a property using illicit funds and then quickly sells it at a loss without a clear reason. Integration is the final stage when laundered funds appear legitimate and are used to finance further criminal activity, invest in businesses, or acquire luxury assets. For example, a criminal might use these funds to purchase a high-end car or designer goods, completing the process of disguising their illegal earnings. Money laundering plays a crucial role in nearly all criminal enterprises, with offenders constantly refining their methods to conceal illicit funds. Through innovation, experimentation and adaptation, they exploit reporting entities to evade detection and integrate illegal proceeds into the financial system. Terrorism financing is the process of providing funds, financial support or assets to a terrorist organisation or an individual involved in terrorist activities, or making an asset available to a person or entity who is subject to relevant sanctions. It can include financing for logistics, such as travel or training, or providing resources that would help an organisation engage in the activity. This includes funding terrorist groups, both internationally and domestically, posing a significant threat to Australia. The terrorism financing process is somewhat similar to money laundering, but with different intentions. It involves the first stage of raising funds, where money is sourced through donations, self-funding, legitimate businesses, or criminal activity. The second stage is transferring funds to a terrorist network, organisation, cell, or individual. And the final stage is using funds, where the money is spent on direct or indirect costs related to terrorist activities. For example, to purchase weapons or bomb-making equipment, making payments to insurgents, or covering the living expenses of a terrorist cell. It's important to note that funds need to be stored at each stage of the terrorism financing process. Storage methods can range from hiding cash in a private residence to depositing funds into a bank account or other financial products. When terrorism financing leads directly to an attack, the impact and harm is visible and severe. It also causes political and social harms in the form of community discord and a lack of trust in government. The cost of terrorism is relatively low, but has significant economic impact. For example, the 2002 Bali bombings cost approximately $55,000 to carry out, and the 2005 London bombings only cost approximately £8,000. The economic impact was around £3.5 billion. The immediate cost of terrorist acts are loss of human life, destruction of property and infrastructure, and the reduction in short-term economic activity. Additionally, terrorism creates uncertainty, reduces confidence in government, and increases the perception of risk, leading to lower rates of investment and lower economic growth. And while the 9/11 attacks resulted in direct costs estimated at over $55 billion in physical damages, including the destruction of the World Trade Center and damage to nearby buildings and infrastructure, whereas the nation's wider response is estimated around $3 trillion. Proliferation financing is when a person makes an asset available, provides a financial service, or conducts a financial transaction that is intended to facilitate the proliferation or spread of weapons of mass destruction. The proliferation of weapons of mass destruction covers a wide range of activities. It includes activities such as the production, sale or use of nuclear, chemical or biological weapons or related materials. It extends to providing training, advice or assistance connected to these activities and applies whether the activity occurs or is simply attempted. The proliferation of weapons of mass destruction can also be divided into 3 stages. Fundraising initially occurs to generate financial resources, leading to obscuring these funds into the international financial system to conceal the origin or purpose of the money. And finally, the proliferating nation uses these funds to procure materials and ship the weapons. I'll now hand you over to Shobona to talk about why your sector's been captured and specific designated services.
Thanks, Mandy. So, why has your sector been included in the AML-CTF regime? Organised crime groups use money laundering to fund and conceal serious criminal activities that harm our community and our economy. Their activities also have security, economic, and social impacts on Australians. It is a key enabler of serious crimes such as child exploitation, drug trafficking, scams, and fraud, for example. AUSTRAC's 2024 National Risk Assessments identify key high-risk channels, such as cash, luxury goods, digital currencies, real estate, and professional services, including lawyers, accountants, and trustees. Money laundering causes significant harm to our community. In 2023, serious and organised crime cost Australia an estimated $68 billion, representing more than $2,500 for every person in Australia. The Terrorism Financing National Risk Assessment identified that self-funding and funding via social media, communications applications, or crowdfunding platforms are high risk. The latter was found to include payments via digital currency exchanges. Regarding the moving of funds for terrorism financing, the highest risk channels were identified as banks, remittance services, non-bank online payment services, and digital currencies. AUSTRAC's expanded regulation aims to close existing gaps and support sectors in managing their risks. Sector-specific indicators will be released later this year to help businesses recognise how their services may be misused. These insights will also be discussed in our upcoming webinar series. The businesses we regulate are at the front line of combating money laundering, terrorism financing, proliferation financing, and the crimes they enable. So, why does AML-CTF matter? Criminals are always looking for opportunities to launder the money they have made from illegal activities and place that money into the legitimate economy. Criminals will look for and exploit the weakest link, so the stronger your defences are, the less likely you are to be targeted by criminals. And money laundering and terrorism financing exposes your business and the community to serious crime. So it's essential to have procedures in place to help prevent or detect this. Again, your business is the first line of defence in protecting Australia's financial system from money laundering, terrorism financing, and other serious crime. The AML-CTF regime helps reporting entities fight these threats in two ways. Firstly, it supports you to harden your business against criminal threats. The regime helps you understand the risks your business may be faced with and the appropriate action to take to reduce opportunities for money laundering, terrorism financing, and proliferation financing. And secondly, it ensures you report valuable information and suspicious activities to AUSTRAC. These provide law enforcement and national security agencies with the financial intelligence they need to detect, investigate, and prosecute criminal activity. Designated services refer to specific business activities that have been identified as carrying a risk for money laundering, terrorism financing, and proliferation financing. And businesses that offer these services are known as reporting entities. So let's begin with real estate and conveyancing. Designated services relating to the sale, purchase, and transfer of real estate and conveyancing services include brokering the sale, purchase, or transfer of real estate on behalf of a customer, and this might be your typical seller's agent or buyer's agent services, selling or transferring property without an independent real estate agent. An example of this is a property developer selling vacant land, house, and land packages or apartments off the plan. Assisting a person with planning or executing a transaction to buy, sell, or transfer real estate. And this includes acting on someone's behalf. Next, we have designated services that will apply when buying or selling precious metals, precious stones, or precious products. This includes jewelers and second-hand dealers who might handle high-value transactions that can pose a risk for money laundering. Products containing precious metals or stones priced at $10,000 or more fall under this category when paid for in cash or virtual assets. A business would not be regulated if it never accepts physical currency or virtual asset payments of $10,000 or more. It also wouldn't be regulated if it makes payments of $10,000 or more, but only engages in other forms of funds transfer, for example, electronic funds transfer or payments by check or by card. Next are the designated services for legal arrangements and trust and company services, which are typically provided by professional service providers such as lawyers, conveyancers, and settlement agents, accountants, business brokers, and financial advisors. Some examples of these include assisting a person in the planning or execution of a transaction to buy, sell, or transfer a body corporate or legal arrangement, assisting in planning or executing in the creation or restructuring of a body corporate or legal arrangement, including acting on a person's behalf. And lastly, we have virtual asset service providers. This replaces the term digital currency exchange providers. We currently regulate digital exchanges between virtual assets and fiat currency. Additional designated services will apply to virtual asset service providers, including the exchange of a virtual asset for another virtual asset, for example, exchanging Bitcoin for Ethereum. Transfers of value, including virtual assets, for example, transferring virtual assets from one person or business to another, and providing a virtual asset safekeeping service, such as virtual asset wallets. Please note, we have not included the full list of designated services in this webinar. You can find further information on the AUSTRAC website and in the AML-CTF Amendment Bill 2024 in Schedules 3 and 6. AUSTRAC will be also releasing further guidance on these designated services. This will include information on what transactions or scenarios will be captured. So moving on to Australia's AML-CTF risk-based approach. The AML-CTF legislation in Australia is risk-based. And under a risk-based approach, your business needs to identify and assess money laundering, terrorism, and proliferation financing risks that it faces and determine which ones are the greater or the lesser threats. A risk-based approach recognizes that risks are not the same for every business, service, customer, or transaction. You know your business best, and you're in the best position to determine what poses the greatest risks to your business. You can then apply your resources where they'll have the biggest impact to mitigate and manage the greatest risks. Reporting entities with obligations under the AML-CTF law vary significantly, from large multi-state or multinational corporations to sole traders. And this is where the risk-based approach enables you to apply appropriate measures to suit the nature, size, and complexity of your business. Large and complex businesses may have entire teams dedicated to this function, whereas small businesses and sole traders often need to wear different hats and divide their attention amongst many competing priorities. To assist small, typical, low complexity businesses providing Tranche 2 designated services, AUSTRAC is developing sector-specific AML-CTF Starter Program kits. The kits aim to provide an AML-CTF program for a typical low complexity small business and insights into sector-wide money laundering, terrorism, and proliferation financing risks. I'll hand you back over to Mandy to talk about your obligations under the AML-CTF regime.
Thanks again, Trebona. So far, we have touched on money laundering, terrorism financing, and proliferation financing, designated services, and the importance of the AML-CTF regime. But what does that mean for you? I'll now provide an overview of the core regulatory obligations that reporting entities must comply with. Firstly, if your business will be providing designated services, you must enrol with AUSTRAC. The key date you need to be aware of is the 1st of July 2026. This is the date the new laws come into effect. Tranche 2 entities must enrol within 28 days of providing a designated service. For many of you, this will mean you must be enrolled by the 29th of July 2026. We ask that Tranche 2 entities don't attempt to enrol now. We've seen a few early enrolments. However, our current forms don't yet include the designated services for new reporting entities. So it's important to roll with the correct services as these impact reporting obligations. AUSTRAC will provide updated guidance on what to do and new enrolment forms ahead of the new obligations taking effect. Virtual asset service providers, along with remittance service providers, have an additional obligation to register with AUSTRAC. Virtual asset service providers and remitters must not provide designated services until they have enrolled and their registration has been approved by AUSTRAC. AUSTRAC can take up to 90 days to assess your application and may seek additional information as part of this process. If your business provides any of the new virtual asset related designated services, the new laws will commence on the 31st of March 2026. Again, please do not attempt to enrol now. Further guidance on how to enrol and register and new forms for this will be provided ahead of the new obligations taking effect. Secondly, you must develop and maintain an AML-CTF program that is tailored to your business. Your program must include a risk assessment to identify and assess the money laundering, terrorism financing, and proliferation financing risk your business may face in providing designated services. And your business must develop and maintain AML-CTF policies and procedures to manage and mitigate your business's risk. These policies must also ensure that you comply with your AML-CTF obligations and be appropriate to the nature, size, and complexity of your business. Your business must also appoint an AML-CTF compliance officer to oversee and coordinate the day-to-day compliance with the AML-CTF Act and rules and the AML-CTF policies your business has developed. We'll discuss this role further in Webinar 2 on AML-CTF obligations. Next, we have customer due diligence obligations, which help you understand who your customers are and the money laundering risks they may bring to your business. This ensures that you identify and mitigate relevant money laundering risks from the beginning of your relationship with a customer. You may find that you already collect and verify your customers' details as part of your normal operations. The information you collect and verify to complete customer due diligence will depend on the money laundering risk profile of the customer. There are different types of customer due diligence, including initial customer due diligence, ongoing customer due diligence, and enhanced customer due diligence. We'll go into each one of these in more detail during Webinar 2 on AML-CTF obligations. Another core obligation is to submit reports to AUSTRAC. Reporting certain transactions and suspicious activities maintains the integrity of the financial system and aids law enforcement in combating crime. The types of reports you may need to submit to AUSTRAC are suspicious matter reports. This is when you suspect on reasonable grounds that a person is not who they claim to be or that a matter is linked to criminal activity or proceeds of crime. Threshold transaction reports. These are for individual cash transactions valued at 10,000 Australian dollars or more, or the foreign currency equivalent. International value transfer service reports for all transactions where an international transfer of value occurs, and annual compliance reports to summarise how you have met your AML-CTF obligations in the previous year. Finally, you must make and maintain accurate and complete records in accordance with your legislation. Again, this webinar is just an introduction to these obligations, and we'll go through these obligations a bit more in webinar 2 on AML-CTF obligations. And we'll also provide more detail on these obligations in future education tiers and guidance. I'll hand you back to Shrabona to take us through the rest of the session.
Thanks, Mandy. So that's been a lot. And we do recognise that for businesses in the newly regulated sectors, these obligations are new. And for many, the concept of money laundering and its connection to crime might be new too. We do not expect newly regulated businesses to be perfect at identifying and controlling from money laundering risks from day one. We do expect honest efforts to meet your obligations and report suspicions to AUSTRAC. We've published our expectations of new reporting entities come 1st July 2026. These include that you be enrolled as a reporting entity once that is available to you, and you'll be able to access this and the online enrollment system from 31st March 2026. That you have an AML-CTF program in place, either because you have adopted the starter program kits provided by AUSTRAC or where you've developed your own. That you have an AML-CTF compliance officer appointed. That you've trained your staff on your AML-CTF program and your processes, and that you're ready to ask your customers questions and start reporting suspicious activity. After 1 July 2026, AUSTRAC will focus its enforcement in the newly regulated sectors on entities who willfully ignore the obligation to enroll and/or register where they're required to, and those we suspect are complicit with or willfully blind to money laundering in their business. One important step that you can take now is review your business's existing processes and daily operations. Many of you may already have established policies and procedures that align either partially or fully with certain obligations under the AML-CTF regime. By assessing what your business currently does and how effectively these practices meet the new requirements, you'll gain a clearer understanding of what needs to be adjusted or reinforced. For example, do you already identify and verify your customers? If so, are your current verification procedures compliant with the AML-CTF obligations? You might find that your existing processes meet the initial customer due diligence requirements for low-risk customers. However, to ensure full compliance, you may need to clearly document these procedures and implement additional measures for medium and high-risk customers. And lastly, stay informed about AUSTRAC's new education initiatives and resources by visiting the Education and Guidance page on the AUSTRAC website. So here, AUSTRAC's developed an AML-CTF Essentials checklist that will assist you in preparing for your AML-CTF obligations. This slide here shows where you're up to on your AML-CTF Essentials checklist. For now, there are 3 more webinars in your AML-CTF Essentials series that we do encourage you to view. Today, we have referenced a number of key legislative dates, and you can see these now on the slide. The reform page on the AUSTRAC website also has these key dates, which may be updated in line with any changes. You will receive important information, including any changes to key dates if you've subscribed to the latest updates about the AML-CTF legislative reforms. As I mentioned earlier, We're from the AUSTRAC Industry Education and Outreach team, and our team will be delivering significant education for Tranche 2 entities ahead of your obligations coming into effect in 2026. This does bring us to the end of Webinar 1, an introduction to AUSTRAC. We hope that you found this webinar valuable and encourage you to view all the webinars in this essential series. Thank you.